Hey, this is Seth Peek with Peek Realty. Once again, joined by Harry Bennett with Equity Reach Mortgage in Rio Grande. How you doing?
Good, man. How are you?
Good, good. Just kind of, it's a Monday here. We're recording this,
Yeah.
trying to get the bearings going from the weekend.
Yeah, absolutely.
Yeah, it's
Well,
been ready
definitely
to.
glad to, jump on again. And, you're always pushing the envelope and trying to like find creative solutions to people here on the Central Coast that are,
Yeah,
or people are moving to the Central Coast. They're trying to find a, place to live, and affordability is definitely a factor, especially in today's market. And so I really appreciate that and all the information you give out to everybody.
yeah. So we got many different types of clients. You and me both, right? We have the cash buyer over $1 million. We have someone with half money down for 900,000. We've got people with no money down, which is not as often nowadays. Or 3.5% down.
Yeah.
Very little down payment. There's many different types of clients that we work with all the time. And right now, like our first time home buyers are having a difficult time with the interest rates, and it all comes down to what they can afford a month. Correct? It's and how much they have to put down on the home is really going to be a big factor, right?
Yeah, and I think right now it's a squeeze a little bit right now, right? Because you have higher interest rates. I mean, if you look at a spectrum of the last 30 years, they're not that high, right?
Right.
But to us, especially millennials that just came out of seeing twos and threes and fours, and now we're in the sevens, it hurts. So I definitely can relate to that. Now, it's the other battle is that you would think the house prices would kind of come down a little bit as interest rates come up, but
Mhm.
since there's little to no inventory, it's staying where it's at. It's staying put,
Right.
and sellers aren't really selling. So that creates this tough market. But with that, in tough markets, that you get opportunities, different programs that come out, and creativity comes to mind, or else those people are gone, right? So
Right. And it's important to know also when someone's like looking to either move to the Central Coast or they're going from renting to buying here on the Central Coast, even right now, maybe they're in a position where they have to, they have to, there's no other options for them, and rent being the way it is here, you're going to be in the $3,000 range on average in North County for a 3 bedroom house to
yeah,
rent. A townhouse maybe a little bit less, maybe 2,600. But when you can swing it and you can get a mortgage payment in the $3,000 to $4,000 range, sometimes
mhm.
more than $4,000, we're going to go over. I know we have an example here to go over, but it tends to make more sense. Like how much can you really budget your money more and then get a mortgage
Yeah,
later on? Possibly refinance it down, but there's lots of spots in the county that are still in the even like the mid fours to like the high fives range, either South County or North County. The kind of like the sweet spot. We were talking earlier about like Heritage Ranch out in like West Paso Robles. If you
hmm,
work in North County, it's only a 25 minute drive out there. That's an option in the 400s typically, or
yeah,
even in parts of downtown suburb area of Paso Robles. You can be in the fives, maybe a little bit of a outdated fixer, but still like a livable turnkey home for someone on a budget.
yeah.
Um, and then in South County, there's definitely options down there as well, right?
Yeah, absolutely. So, I mean, I know we talked about a couple things earlier about, kind of showing some examples. So if it's okay, I'll share my screen here.
Yeah, we're talking about specifically a house in Paso Robles for 579, and this is going to be an example of two different scenarios. One being something you can do now, right, with the FHA loan, and then one being
Yeah.
the Dreams for All. Why don't you take it away? This house is let's just little framework is currently for sale in Paso Robles. We're looking at 1074 Dorothy Court. Depending on when you watch this, it could still be on the market. It's 579,000. It's a 3-2, and it's relatively turnkey. It's a little outdated, but it's turnkey home. So give us a couple scenarios here, Harry.
Yeah, I'll give you a couple of quick options with financing, and then a couple programs that do come to mind that could help. So on the first column there, you'll see there's an FHA option here, 3.5% down, and you have the purchase price of 579. Interest rates estimated to be about 7% today. So here's your loan amount, 558, and now your payment, all in payment, your principal, interest, taxes, and insurance payment would be about $45.75 a month. Okay. Now, that could be a little bit of a payment shock to some people who are paying, maybe $3,000 a month right now in rent, or $3,500. It's still an extra $1,000 extra a month. So it's definitely something you have to think about if it's worth it to you, and why are you making this move in the first place? Why are you considering home ownership? Do you want to build equity? This is basically like a forced savings account for a lot of folks. So it's definitely a good option there. Now, the next column over, this Dreams for All Calhapa. So quick disclaimer right now, I mean, this program is currently not running, right? That program ran out of money. Actually, that program, last time it was running, ran out in 11 days. So, and they had, I think, about $300 million pumped into the program, which they were projecting that was going to be about 6 months runway. It was gone in 11 days. So when they are funding this one come back out in winter, maybe early spring of next year, or of this year, winter of this year, a little bit later on. So when those programs come out, and then you're hearing the communication, your realtor is saying, hey, there's a program coming out on this one, the Dreams for All, jump on that one. Okay. If you want to take advantage of it, because look at the payment difference. The monthly payment from here went from $45.75 to $3,700.
Right.
And the reason is because 20% is going to be loaned to you on the down payment with this scenario here with the Dreams for All Calhapa, right? So there's an estimated payment. That's what you could do. That's a big difference. Now, let's see here. There is, obviously some differences on the programs, right? The shared appreciation loan program, and they're still going to update some guidelines on that. But those are two different scenarios of what you could do if the Dreams for All was out, or if it's not out, you got the FHA 3.5% down option. Plus, there's many different down payment assistance programs out there that we can go over at other times, but I wanted to kind of show a little bit of a difference between those two.
And we were talking, you were saying for the FHA 3.5%, if you could bring it back up, that.
Oh yeah, absolutely.
For a second. We were talking before the call about kind of what your income level would have to be for this scenario here.
Yeah. So, kind of roughly, you would need to make about, at least about $10,000 a month, to be somewhat comfortable, right? And that's assuming you have, limited debt, right? If you have a bunch of cars, maybe you've got a Tesla or something like that, or you got a Corvette and it's a $700, $800, $900 payment, that's going to affect your ability to qualify. But to not, really be living on, ramen noodles, you should be about $10,000 a month. And, that's about husband and wife, or, roughly about $50,000 to $60,000 each, a year in income, right? If you have you and your partner, right, everyone's making roughly about $50,000 to $60,000, you should be able to qualify for this one right here.
Gotcha. And then Dreams for All, Cal, there's no telling when they're going to do that again, but there's a way to like potentially get in more info, so that way when it does happen, you're kind of locked and loaded, ready to go.
Yeah, so it's not certain on when it's going to be released. Calhapa will direct all the lenders and say, hey, now we're ready to rock and roll. But what I would encourage is, you can't apply for this right now. It's not active. If someone's taking an application and saying, oh, hey, we're going to get you Dreams for All, that's just kind of misleading. It's not available right now.
Right.
But what we can do is we can get the, some pieces kind of pre-approved, right? We can kind of see if you're going to match up for the program, and at least have the conversation now. So when it does come out, I can give you a call and say, hey, look, we're ready to roll. Got to get with Seth right now and find a property to get in contract, because you have to be in contract in order for the funds to be reserved. For sure.
Yeah, that was such a swift program they did.
It was quick. Yeah,
it was definitely really quick. So it's not.
We were able to serve one family with that, so that was good.
Well, you didn't have much time to prepare, right?
No,
it was just like, hey, here's this new program, figure it out.
Yeah.
Well, it's not 100% totally bleak, outlook. got dual income. You're each making $50,000 to $60,000 a year. What is that, like $25 to $34 an hour each? If you're breaking it down like that,
Yeah.
you could be in a good position to buy. This example here is for a single family residence, non-detached in Paso Robles. So there's different options as well. My first home was a 3-bedroom townhome in Atascadero, so you can still get into those for about 100,000 less than this. There's 2-bedroom condos and townhomes available in different neighborhoods in like the high threes. And like I said, there's so many options. I wanted to bring up this example because this is like your classic like American dream home right here. It's just a little neighborhood.
Yeah, started. Yeah, and
three,
it's the one thing I always relate to with in regards to interest rates, right? It's a very touchy subject, especially today.
Yeah.
Is that, hey, this rate is guaranteed to you for 30 years fixed.
Right.
You're not guaranteed to it, right? You
Right.
didn't, so when rates do come down, and eventually they will, what we can look at over the last 30 years with interest rates is that there's times where it's super high and there's times where it's super low, right? But when you look at the big picture and you look at real estate sales, the best time to buy a house was always 5 years ago.
Yeah.
Right. And at the time when you bought that house and the interest rate was high,
right,
it's irrelevant now, because now you can refinance it, get a lower rate, and then you can still see your appreciation over the last 5 years has grown significantly. Even if you look at 2007 from the peak, right, where the values were really, really high, and you look at 2008, 9, and 10 where it's low. I guarantee you, if you had a chance to buy in 2007 and looking at the value to today, you would.
Right. Over time.
Yeah. Look at the values now, 2023 versus 2007.
I don't predict the future or anything, but I have a strong inclination, being that I've lived in California for almost 40 years, that there's certain areas, and the Central Coast being one of them, Southern California, Bay Area, it's a fat chance that pricing is going to go down in the next 5 years, so it's like, is the time right? I don't know, the old cliche, the time's right when it's right for you and you can afford it, so
well, I think it comes down to vision, right?
Yeah.
Where do you, if you're doing this short term, don't do it.
Yeah.
Do not buy the home. It's not worth it, because you're looking at maybe a snapshot of the next 2 to 3 years. It's not a very good outcome, right? It could not be, because you're so worried of what's happening right now. But if you back up and you look at big vision, long-term play, real estate's a long-term play. If you look at the long-term, you have a high chance of winning.
Yeah, it's definitely a high chance of winning. Our first house, we were strapped. Like, we had to really scrimp and save and budget to make our payments some month. And, it's seasons in life. Right?
I had a cosigner. Yeah, I had a cosigner. That's how strapped it was. Right. So
you have to get creative. You have to get creative, and you have to budget, and you have to plan right. It's not, it's never going to be easy. And not saying right now is easier. It's harder than it was 2 or 3 years ago, but it's also it's never going to get like easy as people think it would,
Right. Yeah. No, I totally agree.
So don't hedge your bets, just do it when it's right for you. When you need to do it, we talk to someone like Harry to see how creative we can get to get a loan that is doable.
The loan is one budget. A loan is one part. I will agree. It's a 2-part mix, right? Yeah. The other part is the actual contract, and that's where a great realtor like Seth and Peek Realty over there can really make a difference. And I've seen some incredible contracts that came back that made the buyers super happy. We were able to buy down interest rates and get credit.
Oh, for sure. Yeah. Our main goal is, if we're selling, is to get the most offers at the highest price. And, if we're helping the buyers to get,
you're on the defense, you're a football team, man. You go defense, you go offense.
Yeah.
Right.
Yeah.
Absolutely.
Right on, dude. Well, I look forward to our next transaction together, but if it doesn't happen in the next 7 days, then we'll see each other on the next video. How about that,
man? Sounds good.
All right. Thanks.
Bye.